Was Abhishek Goenka. He's founder and CEO at IFA Global. Abhishek, hi, good to have you. And yes, I do want to talk about currencies because almost all the cues seem to be coming in from there. But first of all, there's an 87% of probability now that we might see a 25 basis point rate hike in the meeting in May. How are you reading that? And would you say that has been factored in by commodities as well as currencies?
Hi, Manisha. Good to hear from you. Well, 70 basis point, of course, is kind of priced in. I think across currencies, I think during the weekend, we saw the US dollar getting slightly strong as compared to other currencies. Even the overnight dollar rupee rates in the NDF markets was around 81.55. But today it's close to around 82 levels. So obviously, because of that hawkishness, despite not very good numbers in terms of retail sales and CPI, I think Fed is very hell-bound on raising rates and fighting inflation. So I think the market is kind of pricing in. And to an extent, we are seeing that reflection on the rupee. And also, although Infosys was a major point in case of stock markets, but also I think it could also be one lever for the stock markets.
Abhishek, you know, there is a trend being set right now. Singapore is now joining Canada, Australia and India, where we have seen interest rates or policy being unchanged. Would you say after the US Fed meeting in the month of May, we'll see perhaps more and more central banks joining this?
So I think in case of RBI, I think it has been very, very clear that they have not pivoted. It's a pause. So they reserve, they have the privilege of increasing rates later. Having said that, our inflation is okay. We don't have to do anything in hurry. Maybe after 25 basis point, we see the reaction. But as of now, for India, I think we are pretty comfortable. We may not see hikes. Forward premiums are going to correct because of that. If we see a hike and India doesn't give a hike, then we're going to see the forward premiums further coming down. But I think we are in the fag end. We're not going to see a series of rate hikes in the US now.
All right. How would you look at the dollar index? I mean, as we're discussing, we did see 101 in the previous week. From there has been a bit of a gain, and is the reason many of the Asian currencies today have seen a very, very range-bound trading coming in. What is your sense on dollar index going forward? There have been reports suggesting it could go to 97. Others suggest 105 too. What is your sense?
So, Manisha, our models have been showing weakness in the US dollar during the last 4-5 months. And I think we maintain that because, as I said, we are in the last leg of the rate hike cycle. And with the deteriorating numbers coming in the US, or the expectations of recession, at the same time, entire mess that's happening in the banking sector, I think US dollar is poised to weaken. At the same time, there is one big concern that is lurking behind in the US is you increase the rate so much, and ultimately who's going to buy the debt in the US? So they are in a catch-22 situation where they have to fight inflation. At the same time, they need subscribers to their debt. And the world after the sanctions are shunning US debt, whether it be China, Russia, or be other central banks. They're diversifying into gold. We have seen those numbers. So I think on a medium term, we feel the dollar index to weaken. 95, 96 could possibly happen, maybe in the next 6 to 8 months' time.
Abhishek, also, what's your sense on the Indian rupee then for the next 6 to 8 months? And this whole conversation about de-dollarization, how much are you buying into that?
So with regards to Indian rupee, I think if you look at last 6 to 7 months, dollar rupee has not gone anywhere. It's broadly in the range of 82 to 83. If you look at the walls, which is a measure of the standard deviation of the rupee, it has compressed a lot. I mean, it has come to maybe Feb 22 levels at around 4.62%. So I think ideally rupee should have gone to 80. If you see the way the dollar index has moved against the other currencies, the rupee has not moved at all. I mean, it is broadly at 82 levels. That's mainly because RBI has bought $70 billion because they had used more than $100 billion when there was a crisis. So I don't think that till they move up to $600 billion kind of a number, they are going to let rupee appreciate a lot. But broadly, if you ask me a medium term of rupee, I believe we should see levels of 80.5, 81 rather than an 83.5, 84. Because dollar is weak, current account numbers are significantly improving. And if we have an oil number of $80, broadly we'll have a current account of maybe 1.25, 1.3% of GDP, which is phenomenal. Maybe next 5, 6, 8 months after time correction in the Indian equity markets, we might start seeing flows also. Once the P ratio is somewhere around 15, 16, then I think we're going to see the flows. And so current account number back to good flows, good for rupee, dollar weakness trend likely to stay. So I think sell on rallies is the strategy for the dollar rupee.
All right. I'll add a quick last question to you, Abhishek, and I keep reading your reports and I see a lot of focus and support, encouragement even coming in for gold. What's your sense on that one?
Gold is a very good asset class in the current environment. We have been pushing towards, and we maintain that gold and silver both would be good asset classes for 2023. And it's a buy on any dip. In terms of INR terms also, if you look at last 20 years data, it has broadly given same returns like Nifty, 12%. And with us, we also get interest from the government of India in terms of sovereign gold bonds. So I think it's a great investment in anybody's portfolio. And with a negative correlation.
Oh, yes, it is. And we've seen that perform as well with the kind of gains that we've seen come in for gold and the kind of very bullish conversations and forecasts that gold really seems to be portraying right now. Abhishek, thank you so much for joining us for this conversation. And with that, it's a wrap on this show. Thank you so much for watching.